Tuesday, November 7th, 2:26 p.m. New York time. This video, I'm going to show you one of my methodologies to select a company that's listed on the stock market to determine if it's going to be currently a good one to select for a long-term investment. Long-term investment might be 10 months, 12 months, but typically a long-term investment is 10 years or longer. But in the equity market, it may not be what everybody does. They may not be doing dollar cost average. They might just be buying at one time. So in the S&P 500, the major stock index of the S&P 500, again, is the major stock index. Institutions try to outperform. They compare their portfolios with institutions being mutual funds, 401ks, insurance funds. And in the S&P 500, the broad market has 11 sectors, and each sector has many industries in there. So one of the sectors, the second largest sector in the S&P 500, is healthcare. Healthcare makes up 14.9% of the S&P 500 stock index. That's big. And in the healthcare sector, there's many industries. So for example, this company, HCA Healthcare Incorporated, stock symbol, Hotel Charlie Alpha. Here's the address on the left. It's out of Nashville, Tennessee, corporate headquarters. Sector, again, is healthcare. And within healthcare, this particular industry is medical care facilities. This is free information you can access online. Again, because it's free, the quality of it, the reliance of it, don't expect it to be best up to par. Again, the content is also delayed. So looking here in the healthcare sector and the industry, medical care facilities, let's break that down a little bit more. I go looking at the healthcare sector. Here we are in the healthcare sector. In the healthcare sector, I mentioned there's many industries. This one, again, we're mentioning Medicare facilities. So Medicare facilities down here, again, there's many industries. And just because one industry may have more industries within a sector, example, this industry of healthcare, you might have another sector, let's just say technology sector may have more industries. So they are not apples to apples, but again, we're here looking at healthcare and you have all these industries. And within the industry, particularly we're looking at medical healthcare. So you see for the day, this column here is for the day. It's green for the day. For the year, most of them are red. And again, most of them are big red. So Medicare care facilities for the year is red. If you look at which one is green for the day and for the year, drug manufacturing specialists. So right now, based on these numbers, this is the best industry within the healthcare. And the worst, well, we could look for here, the biggest negative, 42.50. And for the day, negative 6.9, health information services. Yeah. Let's go a little bit deeper now. Again, medical care facilities in the sector, medical care facilities. The medical care facilities, there are many companies in medical care facilities. This is just a list of some of them. Again, the first one, Hotel Charlie Alpha. The market cap is over $62 billion. Huge value based on the last numbers. Huge. I mean, the last stock price right there, $233.82. You may recognize some of these other companies, Universal Healthcare, down, some more. And again, these all we're looking at here are valued over $1 billion, market cap over $1 billion. They're huge. That's Tenet, But now let's look at the charts. We're looking at a daily chart. Each candle here is 1 day. And the market's currently open. It hasn't closed yet. And here's the current stock price, 233 and 0.284. So for the year to date, January 1st to current, here's the high for the year. High for the year being $304.86. We are no longer there. And the low of the year, $215.96. And we're above the low of the year. So the current trend here on this period is down. It had earnings a few days ago. The earnings were October 24th, 6:30 a.m. And what happened? It gapped down. So this is a gap. Let's zoom in here a little bit. Label this. So that means the next day when the market opened, next trading day when the market opened, it gapped down. Remember, the earnings were in the morning and it gapped down. So what's done now? It's up here, currently above. That day it gapped down, but this gap has not gotten filled yet. Taking into consideration, compare it to the S&P 500. Again, year to date. Here's the high for the S&P 500 year to date. So S&P 500 is not at the high of the year, but neither is the stock we're comparing with. And here's the low of the year for the S&P 500. Yep. So right off the bat, you see, let's open this up without the drawings. You see S&P 500 is much closer to the high of the year. Strong trend up, where the low was down here. Big difference. So again, S&P 500 is performing better. The index is performing better than the single stock. Comparing it for the current day, they're both green, making higher highs, higher lows, higher highs, higher lows than the prior day. But here, this high, $234.27. And again, $234.16. So just going to put this line here. High, daily. There we go. So that high again, $234.27. And this high, $234.16. So it has not taken out the high yet. Again, this is stronger because it's the high of this trend. This is not a trend. Let's go into a bigger perspective now. Put these both on weekly time frames. Again, each candle represents a week for 3 years. I'm going to do a drawing here. So on the left, again, is the single stock looking over 3 years, each candle being a week. The high this year, the low of this year, and the low of last year. So the positive thing is we have not tested nor taken out the low of last year. That's good. But again, we're near the low of this year. And last week, it did inside candle. This week, it's inside candle. Simply means it didn't take out the high or low of the prior week. And these big red candles, very bearish. Compared to the S&P 500 here, again, we're looking at the weekly time frame. So again, the weekly time frame, again, last week was this inside candle, small trading range. Last week on the S&P 500, a huge bullish candle, higher high, higher low, extremely bullish. Not last week on this one, no. And the current week, right now, it's only Tuesday. The current week, the weekly candle, inside candle, hasn't made a decision. Yellow candle means indecision. Doesn't know if it wants to go higher or lower. Or here, the S&P 500 broke above the high of last week. Strong. It knows what it wants to do. It wants to go up. So again, comparing, you want to see your company that you like or you're invested in already to be performing equal or better, preferably better than the stock index. So this company is underperforming the stock index. Let's break it down. Another methodology to include, because I mentioned there's sectors, and there's sectors that have many stocks in it. So here we're looking at the stock, Hotel Charlie Alpha, It's the yellow line. It's a line chart. And the purple line is let me make sure I got it queued in there, is the S&P 500s. So current S&P 500 is outperforming. There. The yellow one is the stock. Oh, let's compare this to the sector. Yep, the sector. The stock has a sector. And that symbol is X-ray Lima Victor. So if you don't want to buy the, oops, let's fix that again. Messed it up. X-ray Lima Victor. This is stock ETF for healthcare. So if you don't want to buy the single stocks, you could do the ETF. Well, the stock is outperforming the sector. That's good. It's outperforming that. Oops, let's go back here. Sorry about that. Here. So again, we're going to look at the sector stock ETF. There we go. Again, both of them are weeklies. Queue up the drawing for the weekly. These are both available to be traded. The stock on the left, Hotel Charlie Alpha, and the stock ETF for the sector, X-Ray Lima Victor. X-Ray Lima Victor, being a stock ETF, is very broad. It includes many healthcare industries in here, such as I showed you that list. By comparing the stock to the stock ETF, look at the stock ETF. Last week, inside candle on the stock, but already it's trading bullish, broke above. So it's outperforming this week, outperforming the stock. So again, this is leadership. This one's struggling. Let's put them both on the daily time frames. So the drawings I have are daily. The charts we're doing is the daily. And again, I just want to do it for year to date. So we can finish off here. You can see just year to date, January 1 to current date. And daily candles, here's the high, here's the low, was recently. And this one again, high, very similar, both highs. And after the highs, they sold off. But the recovery on the stock sector is doing much better. Right? Look at the low. Nice faster recovery. First, this stock has not filled the gap yet, nor taken out that high right there. And you want to take in consideration too, yes, this stock ETF being exchange traded fund equivalent to like an index, it's diversified because it has many industries of the healthcare. Again, it's all healthcare, but I showed you several industries. So if you don't want to outright buy the S&P 500 stock index, you can certainly buy the sector healthcare right here. Or you can create your own and buy several stocks. And the other thing I want to include here was concerned always looking at the stock, looking at the bid and ask. Bid $232.84, and the ask $232.95. That's pretty wide, extremely wide. That's bad. So if you buy it, if you're bullish, you're buying always at the ask. And when you want to close it, it gets closed at the bid. Well, you take a loss right away when you buy this, by that amount, the difference. First, if we put the stock ETF, that in there. Again, the difference between the bid and ask here is what, 18 cents? 76 times 4, 18 cents. So 18 cents difference. And we're queuing the stock ETF, X-Ray Lima Victor. There you go. See, right here it says healthcare. Bid $128.38, ask $128.39. It just moves. So it's 1 penny wide. That's outstanding. 1 penny wide. That's very good. Big difference from 18 cents to 1 penny wide. Again, these things could change over time. And as more people are interested in investing in it, you would hope it gets tighter for the other one I showed you. So finishing this off by comparing the stock and the sector. And one more thing, we'll cue this in with the index versus the sector. Again, daily charts, S&P 500 for the current day, green, higher high, higher low, and the sector XLV, higher high, higher low. You certainly go through each of these stocks and look for the better ones in healthcare for that industry, medical care facility, or if you're interested in one of the other industries in this sector, you might look on the one that was showing more greenish for the year. But again, not the worst. Wow, that took a big hit. So compared to these, just some insight of what I like to use for my own screening down, finding leadership companies. That's it for this video. Thanks for watching.